Good evening, guys. Today is November 3rd, Friday, end of the week, and it's a very good week at that. All 5 days that the NASDAQ moved up, the S&P 500 moved up. If you look at the monthly chart, where we at from a monthly basis, still forming, still within the channel, still moving on the downward channel, but trying to move out of the channel and move up. So I think that would be a good sign for a lot of the bulls. In terms of the weekly, it's completely erased almost all of the gains from last week and done some more because it's almost touched 2 weeks prior. It's done a very, very good job. The NASDAQ did 5 consecutive days of uptrend. So that's a good sign. Very, very good gains. Made up almost all of the losses from the last 2 weeks. So that's a good sign. Don't know where it's going to move from here. If it breaks down within this channel or moves up, that's something we need to be able to watch. But it's still in the move. Same with the S&P 500. Very strong day today, up 0.9%, 40 points, and still within the channel for most part, trying to break out of this channel. This is actually good. I hope it doesn't find too much resistance here at the 43.90 zone and is able to move and break through the resistance next week. The Dow Jones Industrial actually has done much better than both of those. Today, it was up about 200 points, 0.6%, but it's actually broken through, as you can see, the resistance that he'd had before, very slightly, but it's still broken through. I'm hoping it continues its progress on the way up. One of the stocks that showed up on my scans was the Trade Desk TTD. Went up very, very well today. Let's go through a 5-step process, see why it's doing well, see if there's anything interesting in the stock that we should be looking at for a trade. We always start with the fundamentals and financials. 6 days to earnings for this stock, as you can see. From an income statement standpoint and the fundamentals, 2016 was about 200 million in revenue. What TTD does, by the way, is connected television advertising. So 200 million in 2016, almost 1.5 billion. So very good move up, nearly 7.5 times in terms of revenue increase, growing 30% last year after nearly a significant. So the growth has been slowing, but it slowed down quite a bit when it came to 2020, and now growth has accelerated in 2021. Seems to have slowed down again, but this seems to be an okay kind of a range. Very strong margins in the 60% range, and net margins now getting to be close to the 7-9% range, 7 to 9% range. On a quarterly basis, growth was in the 20% range for this year, or at least for the next couple of quarters. And then they did a very good job of having their earnings is coming in 6 days, so we should be watching for that. But they've done a very good job of maintaining their margins, both on the top line and on the bottom line. So I like this so far. Good balance sheet would be one of my desires. 4 billion in cash and very little as debt. So not bad, about 1 billion in net debt, but total debt is about $250 million. So this is a safe, good company. I think I like it so far. Price to earnings is very high, and price to sales is equally higher. This is very, very expensive, the stock. So one of the things that I'm, even at this, so one of the things I'm really concerned about with all of these companies with high valuations is how much they drop if they have even a whiff of earnings slowdown. I don't know about the trade desk yet, so we will find out. But this is very rich valuations. A lot of companies in the last couple of days with rich valuations, PAYC, Paycom, have taken a 20-30% hit, and Confluent as well. They took a 30-40% hit just based on slowness of growth. 80% gross margins, 7% net margins, very, very good in that sense. So valuation is a yellow flag for me. Both of these valuations are pretty rich. If you look at the long-term monthly chart for the Trade Desk, went up from IPO in 2016, did a very good jump up all the way to 2021. So that would be my first move, but I don't think it's going to go all the way till there for the medium term. So 91 would be a good spot for the resistance. As you can see, there's been a couple of touches here in that zone, 91 to 92, somewhere in this range. So that would be one spot. And then when I look at it from the bottom, somewhere around here, the 63 mark, where it's done a couple of touches as well, you can see 65 mark would be another good spot. How does it look like from an overall trend perspective? Still within the channel to a certain extent. I'm going to draw both of these. So it's consolidating. So this is a stage 1, rapid stage 2, consolidation stage 3, decline stage 4, consolidation stage 1, stage 2, it's either looking like a decline stage one and then a reverse, or a consolidation. So you could call it both. So if you had to put a box over here, this would be consolidation in some senses. So still not yet out of the woods. I wanted to be able to cross the 86 mark for me to be comfortable that yes, this is actually on an uptrend, but it's looking good so far. So on a longer term basis, it's converging. That's the intent. So it's stuck to making sure that it stays within the channel. That is a good job. It's I like that so far. On the weekly, don't see any major. Oh, hold on a second. This is what a lot of people are probably concerned about. That's not a good sign. The diamond pattern is usually not a good sign, but we're going to keep watching. I'm still a little bit concerned. Two things: valuation, which means one poor earnings and it's going to just tank. If or one poor earnings release, but the last couple of days have been very, very strong. So it's bounced off very nicely off of the 64 range. Look at this couple of days. So weekly candle looks good. It has a little bit of resistance in the 86 time frame. No major patterns to worry about per se, but this has been a series of downtrend followed by a good uptrend. So it's done the channel thing fairly well. I would be very cautious before earnings. I wouldn't expect it to go all the way. If it does, it might hit this top end of this 86 mark, probably come down. But given that this is a stock that is very richly valued, I'd be very cautious before earnings. Wait for earnings. My suspicion is it's going to do what it does after earnings, either take off or go down. If it takes off, at the moment it crosses 91, that'll be a very good point for you to be able to get in. And if it crosses the 91 mark, it's got good support or a good movement all the way to 98 resistance, and even after that, very little resistance all the way to 110. So I like the stock. There are some red flags. Valuation is a red flag. When valuation is a red flag, don't buy it towards earnings. It's always risky. So watch for that over the next couple of days. Not a great chart on the weekly, but I think we should be able to at least watch this for the next couple of days before earnings to see where it does. Thank you very much for watching. Please like this channel, subscribe to it, and let me know if you have any questions.